Hi, I'm Jonathan York, Bear Financial Partners, looking at investment markets. Latest inflation data coming out of the US was still pretty encouraging. Came in pretty much in line or just slightly better. Indeed, one of the major investment banks in the US feel that the Fed might even have achieved its 2% target already. Now, on the back of that, and the US economy sort of pushing along at an okay rate, it's not sort of falling off a cliff. Unemployment is falling a little bit. And with the Fed meeting now in November, December, and also January, potentially we've still got another 25 to 50 basis point cut before the end of the year. But obviously data dependent. Now, US rates having spiked on the back of the sort of Middle East, the increasing tension have sort of come back a little bit. 10 years back at 403, and the 2 years back below 4% now at 396. Now, the US election is still pretty tight out there, and really going to come down to probably 6 or 7 sort of key swing states. And not long to go now until November the 5th election. But the Republicans are facing increasing problems with trying to keep Trump on track and on script. I started the earnings season again in the US, and so far it's been pretty good. A couple of the big financials, JP Morgan reported some pretty good results. Likewise, Goldman Sachs as well. Now, oil, despite the Middle East tension and sort of increase and ramped up hostilities out there, oil's come back to close on $70 now. And that's really on the back of sort of the supply-demand sort of imbalance. There's certainly the Middle East conflict. Israel's facing increasing international pressure out there as more civilians appear to be killed in their airstrikes. And that includes some UN peacekeepers as well. Now, the UK potentially facing a pretty tough budget out there. They've got a little bit of a hole to fill in the sort of public finances. Looks like taxes are going up. But also as well, the UK economy does need a sort of a rate cut. So you've got falling inflation out there, a sluggish economy, and certainly they're looking for the Bank of England to cut interest rates in the near future. Now, in the Eurozone, with inflation now below 2%, the biggest surprise will be if the ECB doesn't cut interest rates this week. In Australia, the cash rate remains at 4.35, and really not looking for any interest rate cuts now until probably February 2025. And while the Australian economy is sort of doing okay-ish, again, it could do with a little bit of a boost. Now, here in New Zealand, after the 50 basis point cut from the Reserve Bank, that's still yet to really filter through into the economy. We are seeing some cuts in mortgage rates, but with a lot of households on fixed mortgages, those interest rate cuts don't really kick in until they come to refix their mortgages. And the Reserve Bank meeting again sort of end of November. The expectation is for a further rate cut, potentially another 50 basis points. As the next meeting after November is not until February 2025. And again, the New Zealand economy desperately needs a boost out there. It is pretty sluggish, and certainly hoping for a pretty good summer with lots of tourists coming down and spending a few dollars. Although certainly the rate cuts are helping with sort of consumer confidence and also business confidence as well. Daily surveys are showing sort of small increases out there. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.